Hello, you trader nerds. Welcome in. It is Wednesday. No. It's Wednesday, June the 7th, in the year of our Lord 2023. It is my birthday. I thank you all for the happy birthday wishes. It's made me feel extraordinarily happy. And thank you so much for remembering my birthday. It's an amazing day. 53 years old today. How about that? So here we are, and welcome in. All right, let's see how the markets are doing. How are the markets doing there, Bob, oh Bob? So let's go to the charts, and let me hide my stuff here so nobody steals my money. Not that y'all would, but someone out in YouTube may very well do that, so we'll see. So we are down 0.2%. Wow. How about that? 0.2%. Let's see what our big green monster looks like for the day. Big Green Monster says we are at a little bit of an inflection point where this could be resistance or support. It could serve as both. And remember yesterday, I told you that I would be even more bullish on the market if the point of control moved from down here to up here. And now the point of control has moved. So to me, this is bullish, and we may see this serve as a bit of support as we go to the 4,333 number that we think we're going to hit before June the 16th. But what do I know? Because market direction is meaningless. Now, we do have this really huge gap right here, right, where there's no volume that's been trading. So we may see, a return there before we go up. But by the point of control moving up, I'm much more bullish than I was. Let's see, where is this darn thing? How do you change your, I don't even know how to change the symbol here. Let's see. I don't know. All right, so let's get back and see how our accounts are doing today. So on this one, how does this one look? Let's see. Lost everything. All right, this one we are at an 86% probability of profit. $38,311. Let's see how that's doing today. 38,311. 38,311. Do you see what I see? Fire up the band, Rico. Hallelujah. Now let's see how our little thing is doing here. So we are at 42 deltas and 48 theta. 42, 48. Let's see what that looks like. 42, 48. And VIX is down to 13. How about that? And our buying power usage is a measly 8553. 8553. So we're using 22%. Our theta is groovy, and our deltas are fine. I don't see anything to do there, do y'all? Just let that account see it. Now, some of you have been having questions. Bobby, where do I make adjustments on these individual trades? Remember, no adjustments on anything unless your metrics say that you need adjustments. I don't need anything. My buying power is good. My deltas are good. And, in this low VIX environment, we're saying try to keep it around 0.10, but I'm 0.13. There's fine. There's no adjustments in anything that you need to do, right? The market is what the market is. Don't over adjust. Stacy told us, is Stacy here today? Stacy told us in one of the chat rooms the other day that, hey, she had like 3 closing trades for the month of May. And she said, that's about right. She says the least that she touches these things, the better that they perform. So don't over adjust. So now let's go to the IRA. See how he looks like. Come here, little IRA. So you are which one are you? You are this one. And this, we are at 86,696. 86,696. 86,696. Fire up the band, Rico.
We're moving on now. To the side. To a deluxe apartment in the sky.
Yes, hallelujah. And make sure you bait away. I don't know why it's unbeta waiting on every time. We need to figure out what's going on here. Let's see what our betas and deltas and all that garbage is. So here we are at 7 plus 76. 7 plus 76 is what? 83? 83? 80. 83. Notice my deltas and my thetas are really close in two of the counts. 83, 80. So let's see what that looks like. Deltas went up a little bit, market went down. That makes sense. 83.80. So we are a little blue, and VIX is at 13.14. Doesn't matter. It's under 15. All right, our buying power usage is 21,663. 21,663. All right, so look at there, 24.99%. Now, I'm close to that. So you could stick here if you want to, but I think what I'm going to do is I'm going to put on a little bit of trade. So the market's down a little bit. So I think I'm going to put a little more theta into my gas tank. So why don't we go out? I kind of like how Victor did it. You know, he's like a minimum of $20 at a 9 delta. I kind of like that. You know, getting a little more credit. And, you know, if you go out a little bit further than 60 days, who cares? So let's look at that. So let's go out in the micros. And where can we find a 20 at a 9 delta? So we'll start at the 60 delta, the 60 days, just to show you that we probably won't find anything, right? At a 9 delta, I go by probability of in the money. So if we go up to a 9, can I get around 20? Let's see. Let's see, 9 in this area. So see, they're not going for 20, right? So what he does is he goes out a little further. I kind of like that. Let's go to 72. Let's look at the 9% probability of being in the money. And see if we can get closer to 20. Boy, my little finger is so 9.
Well,
okay.
Can I jump in for a second?
Oh, I'd love to hear it, Victor. Yeah.
I
may be doing something wrong.
No. I just wanted to mention that, you know, following yesterday's video, I realized that the put debit spread was too close to the naked puts, and I think I modified my rule a little bit to say, instead of going 21 or 14 days, go to the closest 70% of whatever DTEs of the long ones. So if it's, you know, if it was 80 something yesterday, I would have gone to the next one 55 or 56 instead of 70, 73, because that's enough. I figure 70% is enough difference to get to my 80% profit.
Okay, that's interesting. That's good. And I appreciate you telling us that. So let's sell 2 of these, if we can get filled. There we go. So we got 2 of those. Now, what I kind of liked, you know, I liked your logic of going, hey, if I'm going to take this off, it's 36 days, right? 36 days or 80 or 90%. Then I need to at least have a put debit spread on for 36 days. Right. So I could go all the way down to 36 days. I could go down probably, I'd put mine in this 44 days. And so that would give me 8 days with a put debit spread with no naked attached to it. So let's go to the 44 day. It's just easier for me to build them over here. MES. So I'm going to put mine in a 44 day. And where's it at? 44. And I think I'm going to do just a 50 wide this time. So there's 50 wide and get her down to 975. Uh-oh. Well, that's not far at all, is it? That's not going out of the money at all. Look at there. That's kind of cool. So if I go up here, there's $10. So say the 41, 42, 40, 41.90. 42, 40, 41.90. Help me remember that. 42, 40, 41.90. Oh, I'm getting my little fingers all just tired. Wrote 42, 40. Crap, I don't forgot the strikes. 42, 90, 40, 42, 40, 41.90. 42, 40, 41.90. So we're going to sell the 41.90. Here we go. 41.90. We're going to buy the 42.40. 42.40 right there. So for about, oh man, I'm going over 10. Let's see, that's fine. Oh man, it's gonna make me go 10.50. That's fine. I'll do it. Well, it's gonna make me go to 10 quarter at least. Let's see. There we go. We're in for 10 and a quarter. Good. Okay. Any questions on that? Why we did that? I like that a lot. I really like that a lot. So everybody realizes that by being only 44 days out, that is closer to the money. Look, I'm really close to the money on my put debit spread for $10. Now I only got 44 days of protection, but chances are I'm going to be closing my naked puts in about 36 days because they're 72 days in. I love that. Love it, love it, love it. And we can actually look at it on the Analyze tab. Let me put the groups in here. Show the groups, and this should be unallocated is what I just put on, right? The 44 and the 72 days. So let's go to Analyze. Let's go to single symbol, hide simulations, and let's just do unallocated. Ta-da! There's our little bird. And a beautiful little hummingbird. See the little eye there and the little thing, and put a little wing here. You got this beautiful little 112 trade. I love it. Let's see what the groups are on that trade. 112 is $4.54 of beautiful, beautiful theta. Isn't that great? So now let's see what our total theta is. Make sure we did add some to it. All right, so let's see over here. Show group. So now we're at 81. What's that? 95, 95, 86, 95, 86.
Who is dirty again?
I know, I got to fix it, baby. 95 to 86. Look at that. And our, hey, y'all close that door. And our buying power now is 23,141. So that went up a little bit. 23,141. Jojo, put my timeout sign up. Here. I'm gonna show everybody. I'll leave that up here. You're gonna tear it up.
What do you mean timeout?
That's the time from the timeout chair we used to put y'all in timeout in. So we're at 26% buying power.
No, it should be over here then.
We'll put it somewhere. All right, so now let's go to the final account. Uh-oh, sorry, Jose. That was a bit quick for someone who uses interactive brokers. Could you redo slowly? Absolutely. Let's look at the final account first, then I'll go back through that trade one more time. Okay, make sure everybody realizes what we're doing. All right, so let's go to the Crimson account, see how we're doing today. Crimson account is giving us $36,020. $36.20. Oh, yes. Fire up the band, Rico.
We're moving on up to the side.
Look at us.
To a deluxe apartment in the sky.
Yes, hallelujah. Up $66 on the day. That looks good. Greeks and ratios. We are at -7 and 32. What is that? 25? Yeah, 25 and 38. 25 and 38. 25. Oh, yeah, we got great theta now. Look at this. 38. Oh, yes. Exactly where we want to be. 14 there. And our buying power is 9,300. I can't do that in my head. I'm so bad at math. 9,300 minus 1,709 for my loans there. So that gives me 75.91. So 75.91 is 21%. Beautiful. All right. So there's nothing to do here. My deltas are fine. My theta is right where it needs to be. And my buying power is under 25%. Okay. So let us talk about what we did today. So open up the whiteboard. Oh, man. Why is it not going to stay over there? Huey on. Let me change this a minute. And our working area is here, baby. All right. So let's do some drawing. You know, too. Why is all my pens red? I don't want red pens. Huh. Oh, there we go. I like the little rainbow. There's so many colors in the rainbow. All right. So here's what we were doing on the naked put. This is kind of what Victor does, right? So he's going out 60 days plus, and he's going where he can find a 9 delta that's trading for about $20. And he's doing 2 of those. Right? Got that, Jose? So that may be at the 60 DTE, it may be at the 70 DTE, it may be 80 DTE, but he kind of is liking to getting that $20. Now, What he's then doing, now this is where he and I might have a little bit of difference. It's not really a big difference, but it's a little difference in what we're doing. He would go in about what, 21 days now, right, Victor? So
I would
6
go to 70 to DT. That's close 70% of the DT for the naked puts. So if the naked puts are at say 70, then I would be looking for around 50. If it was 60, then it's 40 something, roughly. It doesn't have to be precise, but around percent. The reason I'm even mentioning this is because yesterday that with such a low volatility, we had to go all the way to 86 days, which is not usual. Usually you don't have to go that way. Usually you stay between 60 and 70, and then you just look for around 50. But yesterday, given the low volatility and us being at 86 days, I felt initially that the 55 is too far away, but then later on realized, no, it would have been good. It would have been better to go with 55 or 56 instead of 73, because it would get us closer to the money. We would get more protection faster. So roughly 21 or 70%, it's going to come up to the same thing. Just a little bit mechanics difference.
Yeah, well, thanks for sharing that. And so what I kind of really took to heart is his thing about, having these residual put debit spreads, is it really worth having them? So what I said is this, I took it a little step further and I said, if my naked is at 60, my plan is to close it when it gets to 30. So I need to put debit spread to protect this for at least 30 days.
Yep.
So whether you're at 30 or 42 days, I think mine today was what, 44 days or something, 42 days, that way that put debit spread is going to be closer to the money and offer protection quicker than it were if I were to put it out at the 60 days. I love that. Now, may I still will I still do some naked puts at 60 days and put my put debit spread at 60 days? Sure, I can still do that if I want to. But I'm kind of like layering these little things in and having a little bit of this. And then what he's doing is he's doing 300 wide put debit spreads, right? And he's still paying the $10 that we're paying for the 50 wide. Now, the 300 wide, I have basically said is kind of like getting more of a crash type protection, a big move protection, whereas the 50 wide is more of a grind down protection, which has been kind of cool for us in our style of trading. So you do either one. And I think what I'm going to do is I'm going to do mostly the 50 days. I kind of like those that we've been doing because most of the time the market grinds down. And every now and then I'm going to swap in a 300 wide. I love it. So I think we got diversification of strategies. Right? We're kind of doing, I can layer in some credit spreads if I want to. Call credit spreads, put credit spreads if I want to. I can have 1-1-1s. I can have 1-1-2s. I got all these strategies I can do now. And we've got diversification of DTEs. Hey guys, turn that game down, Lily. So we got, 90-day DTEs, 60-day DTEs. We got all kind of stuff. I love it. I love what we're doing. Just love it. And our little strategy is really working well. Let's see how we're doing over here. We are at 6.94. Market's at 11.02. Okay, 11.06. We're at 7%. Market pulls back, we're going to catch them. If it doesn't pull back, we may underperform them. But at the same time, this is the month that we had a little bit of problem. It was in March with the vol increase, which I still believe I didn't handle correctly. I should have just said. Now, you never know if you did the right thing or not, but who knows? But I like what we're doing. Let's see what our weekly premium tab says. We are on track for, and see this, I should have more than 13% of the premium that I've sold, but we're projected to make $4,700 on the month, 13% on the year. We're staying in trades 40 days. We do have a positive expectancy. Let's see, where's my positive expectancy? I had a positive expectancy somewhere. Average credit, private yearly return, win rate. Oh, trade expectancy is positive. right? And we're only doing 55% on our naked puts. We hope to be 80 or 90 going forward. We don't have any volatility problems. This was closing some naked stuff. And then again, here's why we say don't put too much stock into those put debit spreads. The vast majority of the time, they're going to end up full losers. But why do you do it? Well, that's a good question. I think what you do though is you want to have a let's go to Victor's little chart here, his risk profile. Gives you a really nice risk profile over the downside. Everyone see that little bump there? The trade you did today is a 112. The naked put is not in the tent, correct? Okay, it is in the tent. Yes, it is in the tent. Jose, I'm almost at par. Could you revisit the exact trade you made, strikes and DTE? Absolutely. So let's go see it. So we did. Let's do our groups here so I can see the DTE, so I can tell you again. So our wrong count. This one. So this one, we did a 72 day. I did 2 of the 3870. Wait a minute, I thought I should be in the tent, but I guess I'm not in the tent. The 3870, I guess because I put my strikes so far up at the 44 instead of at the 50 something, I'm not within the thing. But we'll look and see what it looks like. 4240, 4190, and the 3870. Hey, you got that? Let's model it out. Let's see what this looks like. So we said the 3870s at 72 days. Let's do that. 3870.
Well, we could ask you a question. Do you always do 2 naked puts?
Well, sometimes we do a 111.
Ah, okay.
Yeah. So 111, I like to get about who pulled that darn board off and got the nails showing. I kind of like getting in about $22, $24 on a 111. You know, and so let's see what it looks like. Here were my strikes of my put debit spread, and then we went out to the 72 days and sold the what was it, the 3870s. Let's see what that looks like. 3870s, really close. So we sold 3870, 2 of these. Let's do 2 of those. Okay. Let's go to the curve analysis. Pick them all off other than those 3. See what this looks like. There she is, Miss America. Wow, look at that. That's crazy. Let me see if I can, how do I zoom into this? Oh, there we go. There we go. So it doesn't quite look like Victor's, but I kind of like it. Look how far out my negative put is. And look, by putting that really close, you know, look at the grind down protection starts really kicking in really early on that one. Really nice. Isn't that cool? So it's even better protection than having your 3870 in between the strikes here. So if we were, you know, doing the thing like we normally did, and again, you're normally in that tent when you're doing the 300 wide strikes anyway, right? So doing the 300 wide strikes, you'd be way on down here. So this is just a 50 wide that I did. But I love this little risk profile. Looks really good. Look at this. Market goes up, we make $147 on that trade. Market goes down, you hope it goes down because then you made $397 on the trade. You could take a little heat, but the market's currently at 42.81. I mean, you'd be taking $400 of heat if the market goes down to 39.90. Are you kidding me? But if we stay there, you're going to be fine. I love this trade. Love this trade. All right, anyone got any questions, any comments, any Anything we need to talk about? Hey, Quentin, good to see you in here today. Anybody got anything? Okay. Well, y'all enjoy the rest of your day, and I will see y'all tomorrow.